Good evening, everyone. So who wants to talk about banks and banking policies tonight, Friday night, after a few drinks? That's what I thought. No, nobody wants to talk about it. I'll make it quick. All right, so first of all, I think the reason we're here tonight, basically probably two things. The first is to celebrate the release of the launch of our book. So Jessica, as a few of the previous speakers have mentioned, Jessica and Richard have done a fantastic job putting the books together to really have this book for the industry to provide a holistic view for people, not just the new entrants, but also the existing operators, to get an understanding from different aspects of the book. So it's very exciting to see the books are finally out after 2 years of preparation. So very exciting. And the topic of my presentation tonight is basically I just wanted to share a few ideas of the fundamentals to help people get an understanding of what the banks are looking for when they not just release the funding for your purchase, but also the ongoing requirements and conditions as an ongoing basis, just to make sure they are happy with your operation. So first of all, why the book? I think it's an all-round coverage for new entrants. I mean, mentioned rights industry has been around for decades, and we are seeing a lot of more people coming into the industry as new entrants. But I guess before this book, people can just sort of get information from their colleagues and from their peers. But then with this book coming out, people can really start to think about, if they want to get into the industry, what do they need to get prepared before really start doing the process. And then it's an easy read. It's in plain language. I mean, I believe anyone can understand it. But then again, it's got a lot of insights after years of experience from people working in the industry. So it can provide insights even if you have been operating the business for a while. And also, I think after you've read the book and started utilizing the resources from the book, I think you essentially come into a management rights specialist club, so that going into the future, you know who to go to, you know what questions to ask to help you grow the business and make the best out of it. So that's the book. And so the real topic for tonight is pretty much in light of the recent cash rate cut and everything. I think it's important to get back to the fundamentals of the lending policy. What are the banks are looking for making the decisions to lend money, and also ongoing processes. So essentially, that's the 5C. So the banks will use the same term. So basically, capacity, collateral, contribution or capital, character, and conditions. So capacity is basically whether you can repay the loan. So obviously, when the bank releases the funds, they want to make sure you're going to repay the loan, and also they can make the interest income out of that. And collateral, before they think about whether they're going to make money out of it, they need to make sure they can get the money back. Without losing it. So how much you can sort of contribute as a security, so they can be certain that they can get the funds back. Contribution: how committed are you to get into the industry? How much funds you're going to contribute? So in this sense, the lenders are more like a investment partner with you, so that they contribute some, and then you contribute the rest. So it makes the whole thing happen. And character, I think this is something that's starting to draw a lot of attention, especially from what we have seen. Within the characters, obviously, when you're going to buy into the management rights, there will be a body corporate interview. And then a lot of the times nowadays, the body corporate interviews or the body corporate lawyers are starting to impose a lot of additional requirements. So that's making it rather difficult for people to get the final deed of assignment. So I guess so the character here is not just about repaying the amount, keeping a good credit score, but also what you have done before going into the industry to make sure that you have sufficient experience. So when you get into the complex, you can start delivering value from day one. And then obviously conditions. So that's where the bank is based on your situation, the bank will give you an offer with all these conditions. But then I guess from the operator's point of view, they really need to start prioritizing what they are really after. So obviously everyone wants a good offer, but then again, whether you need the maximum loan amount, or whether you want the lowest fees, or whether you want a better or easier review process down the track. So that's all what we need to consider before we go into it. And when are they applicable, the 5 Cs? So obviously before you purchase the business, you need to really start building up your experience and your whole finance situation to make sure that you are in a good position. So when a good business comes up, you are in a good position to go into it. And then obviously during the finance application process, you will need a good finance broker to help package up the application to demonstrate that you are really qualified for getting the loan and start running the business, so the bank can help you buy the business and also get a return on their investment as well. And then ongoing operations, obviously that's more involved with the covenants and conditions subsequent. So essentially, whether you are maintaining your license, whether you are meeting the interest coverage ratio and things like that. So the banks will want to know that. And then what is your exit strategy? So basically, no matter how much we love the industry or how much we love the business, obviously there will be a day where you will decide to exit the industry. And in here, I'm going to steal a concept that I have repeatedly heard from Mahanis. So essentially, you need to have the end in mind when you go into the business. So it doesn't really matter whether you're going to sell it in year 1 or year 5 or year 10, but from day one, you need to be prepared. Say if someone knocks on the door and wanting to buy the business, whether it's at the best situation that you can generate the best outcome for you. Hold on. Yeah, so just a bit about Golden Water Finance Group. So we are a company started back in 2014, so we specialize in management rights lending from 2015. And over the years, we have helped quite a lot of people getting into the industry and also helping them with their review process. So basically, with a lot of lenders, we are maintaining our premium broker status, and we have been nominated back-to-back 2018 and 19, the top 10 commercial brokers in Australia. Yes, you would have known that I am one of the co-authors for the book, and I wrote chapter 3, which is about the finance aspect of the business. And lastly, obviously, we are most happy about our testimonials from our clients who really said some nice things about that, which keeps us going forward. So yeah, so that's basically just a short introduction about the fundamentals. So we just wanted to sort of draw everyone's attention back to the basics with the lenders. So obviously, you work really hard to get into it, but just make sure you always keep the 5 Cs in mind, so that your business is always in the best position, and then you make the most return out of the investment. That's me. Thank you, everyone.